How Metaplanet literally manages to print money to buy Bitcoin at crazy rates. Ni hao, ladies and lady boys, welcome to the channel where I document my journey to financial freedom and share everything new that I'm learning as I am learning it. For this video, I'm going to explain how Metaplanet manages to raise so much money at such an extra rate while keeping their debt so low and increasing their stack of Bitcoin at an exponential rate, aka they're a money printer. I believe this is the most underrated company and most asymmetric bet that I personally could find in the market, and it's also the sole stock that I currently own and I am stacking like crazy. But for this company to make sense, we're going to have two assumptions. The first one is you're going to have to be familiar with Metaplanet. Otherwise, this video won't be making much sense because I'm not going to explain the company or exactly what they do beyond the fact that they're a Bitcoin treasury company. And the second assumption is super important. You're going to have to believe that Bitcoin price will keep going up in the future, because if you don't believe in Bitcoin, a Bitcoin treasury company is not going to make that much sense for you. I want to show you this graph. This is honestly one of my favorite things that I've seen in the market lately. This graph represents the debt that Metaplanet has versus their net asset value, which is based on Bitcoin's price. And as you can see, the orange color is their net asset value, and it increasing at an exponential rate, literally a rocket ship going up. While if we see the debt at the bottom right here, it is barely going down. It is linear at the worst. So how does Metaplanet manages to raise so much money to keep buying so much Bitcoin, while at the same time, as you saw, their debt is still so low? So for that, I'm aware of two strategies that they use that we're going to look at. And the first one is them issuing zero coupon bonds to their investors. If you're not familiar with the term zero coupon bonds usually, when they're issued, the company has to pay interest to the bond holders until those bonds mature. But Metaplanet doesn't want to keep paying people for holding those bonds. So instead, they issue zero coupon bonds, aka bonds that don't have any interest that the company has to pay. But to make those bonds valuable or appealing to the investors, instead they're sold at a deep discount compared to the maturity value of those bonds. But at this point, you might raise an interesting question, which is, if they managed to raise so much money through bonds, but then they took all that money and put it into Bitcoin, but they don't want to sell any of the Bitcoins that they hold, how are they supposed to cover those bonds and pay them back in 6 months? Well, for that, there's a few ways we're going to have to look at. One of them, which has been the way for the past few bond series, if I believe, which is by allowing the investors to convert that debt into equity inside the company, aka the investors will hold more shares of the company, and thus Metaplanet does not have to pay back that debt. I hope that makes sense so far, but they're all too much theory. We want to see some numbers, because without numbers, things don't really make that much sense. We want to see exactly what they're doing. So for that, I made a beautiful table of the series that were issued in the months of May and June. And for each bond, you can see the issue date, maturity date, the amount, and the redemption terms of that specific bond, because they're not always the same. So in total for those 2 months, there was 8 bonds that were issued. I'm not going to go through every single one. You can pause and look at them if you want. But as an example, we're going to take the first series, which is the 12th, that was issued on May the 2nd, with a maturity date on October 31st, which means that's, I think, around 6 months before that bond matures, and it has the amount of, I believe, that is a 3,600,000,000 Japanese yen. And for the redemption terms, that bond has to be redeemed at face value, with a possibility of early redemption, with a notice tied to stock rights. And we're going to take the last bond, which is the 19th series, that was issued on June 30 with a maturity age of December 29th of the same month, which is again 6 months, but this time instead of it being a value of 3 billion, it is a value over 30 billion. It's like a 10x pretty much a month later. And that's how you can see that the fund that has been buying those bonds are just their conviction and track record with Metaplanet has just been skyrocketing and going up, and also the stock has been going up, so Metaplanet can just print even more money, which is awesome. So for the months of May, they raised in USD 132 million, and in June they raised 416 million. So in total, that brings them a revenue of 549, or half a freaking billion USD that they can buy Bitcoin with. Insane. I hope that makes sense. That was the first way how Metaplanet manages to raise so much money. It's so easy, it's very simple. And if it sounds complicated, it's usually wrong. Well, I think I just shot myself in the foot with that statement, because the second way we're going to look at is actually a tiny bit more complicated, not in the mechanism, but in the terms, because it is not a very popular, which is using moving strike warrants. So they raise money that way immediately, aka upfront, by selling warrants to investors, and they also raise money by selling shares once the investors exercise those warrants. But I know this is not a very popular thing in many countries, so we're going to have to do a tiny deeper dive and explain what moving strike warrants are and how Metaplanet makes money with them. Moving strike warrants are very easy to understand. They're pretty much the stock acquisition rights that you can hold that have a moving, aka variable strike price that can be sold to investors. A strike price is easily said the price that you're allowed to buy a share at if you hold those warrants. It might sound complicated, but the easiest way I can compare it to, for example, are call options, which are very popular and many of you might know, which is you're allowed to purchase shares of a stock at a certain price, regardless how much higher that stock will be at a specific time in the future. But the difference here with moving strike warrants is that strike price is not fixed. So it's price that moves and resets periodically, often even daily, and in the context of Metaplanet, which we'll look at at a different video, that strike price resets to the average price of the previous 3 trading days. So it's based on a stock's performance. Typically can also get a percentage discount, like 90, 100%. So for example, if a share closes today at a certain price, the investor can buy it at the 90% of the closing day. And there is specifics that a company can also disclose on top of that, like an initial exercise price set at or above the market, a floor price, which is the minimum strike price to prevent dilution in case the stock price falls excessively, or how long the exercise period will be if you're holding those warrants. And I wanted to add one of the coolest things that I found is that in one of the rounds, Metaplanet issued the largest moving strike warrants size in Japan's history at around 753 million United States, aka Freedom dollars, issued at an effective fee of 0%, so no discount. The investor has to get it at the closing price, which is the lowest ever. We like numbers, so every time we're going to talk about something that is very complicated, we're going to have to look at some numbers that makes them easy, simple, and nicely digestible. So we're going to look at a nice, tiny example how moving strike warrants work in the case of Metaplanet or any business in this case. So our assumptions are going to be that a business sells a specific investor X, which is a random number units of moving strike warrants, each for 100 Japanese yen. That's the currency we're going to be using because Metaplanet is a Japanese company, so we're keeping to the same theme, each after trading hours. So the company's stock price closed for the previous, let's say, trading day at 1,500 Japanese yen. And let's say if that company happened to be Metaplanet, their stock prices rises the next day. It opens at 1,550 and climbs to 1,600 yen. So the investor decides they want to exercise those moving strike warrants, and they use that to buy 100 shares at 1,500, which is, let's say, the previous day's closing price, which what the moving strike warrant, for example, would have allowed them to do, for a total of 150k, and sells them immediately for a total of 160k. So the investor takes a profit of 10k on this trade, and the business receives now, on top of the 100 yen that the business received for issuing those warrants, now it receives 150k for issuing new 100 shares to that investor. And that's pretty much how a business can raise money using moving strike warrants, and how an investor can take profit of market price volatility to exercise those warrants. And finally, before we end, this is what I call the money glitch cycle, or the money printer, which is the business, Metaplanet in this case, raises money using bonds and moving strike warrants, buys Bitcoin without money. Bitcoin appreciates, covering the dilution, because obviously the business issues new shares, diluting them, which technically should put a selling or down pressure on the share price. But then the stock price surges because people see, oh, they're going to be holding way more Bitcoin, which will appreciate even further in time. And then the warrants get exercised because the investor get excited about the new prices going up, use new cash to repay the bonds early and buy more Bitcoin, and then we just repeat this whole cycle over and over and over and over again, which is so beautiful. And then, ladies and gentlemen, this is going to be a very recurring theme in this channel, so I'll try to end each video with something cool that I have done, usually the day that I filmed this, or like the day before, or a couple of days before. And because this channel is about searching for freedom, it's about doing cool things, about enjoying life, and all of this we do is an investment. It's just a tool to an end. So a couple days ago, I went to a techno ballet. Yes, it's a ballet, but instead of dance to classical music, it is being danced to techno music, because hey, welcome to Berlin, Germany, the capital of techno. Let me show you tiny clips of the performance, which was actually amazing. That leg move is proper ballet, but somehow still very filling with the techno music. It should be a thing. And then this was crazy when they were doing this. I love how like they synchronized the moving up and down and everything with the techno music. Listen to this. It's coming, yes. It's still not super traditional way to do ballet, but it's still very, very beautiful. And with that being said, I hope you enjoyed this. I hope you have a beautiful day, and I will see you next time while digging deeper into more finance stuff. Bye bye.